Welcome, ladies and gentlemen. That's Commodity TV here for you out of Switzerland, out of our home studios. And with me here is now Revival Gold CEO Hugh Agro, who wants to give us a company update. We want to talk about the gold markets, of course, also, but even more important about Revival Gold and how the company is doing. Hugh, welcome and good morning.
Thank you for having me, Jochen.
Yeah, great to have you here on board. And yeah, we want to go through the company presentation now with you a bit. And what I found really interesting is that you guys, meaning you and the management, have put in another $1 million in the company. So that's very positive.
Yeah, well, these are difficult times, as everyone knows. And I think it's really important for management to step up in this environment and be supportive of their own companies. Of course, it's important to top up the cash and make sure that we're well ready for the storms that we're facing. This is a lovely view of the site at Beartrack-Arnett in Idaho in the western part of the United States. You can see we're in a relatively remote part of the world, which is nice just about this time. Cautionary statement here. And really, as we think about the crisis that's going on, it's important to think about gold. Of course, we already had a precarious situation with global capital markets, and layered on top of that now is COVID-19. $4.5 trillion in bailout monies to date that we know of, as reported by the FT. And of course, against all of this, the backdrop of declining availability of prospective deposits to feed future demand for gold. And even current demand for gold. Of course, there's a big gap now between the pace of global production and the pace of global discovery, let alone putting those assets into production. And this is the spot we find ourselves in, and this is why we're focused on the gold business and with Revival Gold.
Mm-hmm. Absolutely. Also, gold 2000 is quite likely, right?
We certainly think so. And I think at this point in time, you know, the strategy for a company like ours starts to shine. We're a growth company in gold. We're focused on bringing new ounces into the market at a point when precisely then the generalist investor is looking for security of currencies. We're advancing the Beartrack-Arnett Gold Project in Idaho, the United States. Great place to be working in. We are the largest past producing gold project in the state of Idaho, second largest gold deposit in the state. We're 100% gold, and it's now at multi-million ounces, 3 million ounces of gold as of February, just this past month. We have outstanding exploration opportunity on the site, and we're well positioned in the crisis, as I pointed out earlier, and as you mentioned, Jochen. The company just completed a small top-up financing to weather the storms that we face.
That's fantastic. Who participated aside of you?
So we had management and our key shareholders, including Orion Mine Finance, which is about a $3 billion private equity fund based out of New York, focused on the mining industry. Strong supporter of the company, and I think it's a great validation of what we've been doing over the past couple of years with the business.
Mm-hmm. Great.
Just proceeding forward here, a quick summary snapshot on the capital structure of the company. 55 million shares outstanding post this raise that we've been just talking about $1 million of cash in the company, and a market cap in the order of about $35 million. You'll note that we have 5 analysts covering the stock with target prices in the order of, I'd say 4 to 5 times where we are today in terms of our share price, $1.90 per share on average. So lots of upside in the stock and a tight capital structure at the company.
Yeah, and I see also that management has 13%. I think that's also a big thing that you guys have really skin in the game here, right?
It's important. We take our roles in the business very seriously, and we're in perfect alignment with our other shareholders. This is the team here. Our non-exec chairman is Wayne Hubert, whose main claim to fame, I think, was the success of Andean Resources, sold to Goldcorp for $3.5 billion and built over the course of a number of years starting from $100 million. I'm a mining engineer by background, President and CEO of the company, and I've worked in this business for 30 years. This is really an exciting time for me personally, because we're building a business from the ground up, and we have lots of skin in the game, and really love the upside in the project that we have at Beartrack-Arnett. The rest of the team includes individuals who have had direct experience with the project, who have, in the case of our general manager, ran the project when it was an operating mine. And also, you know, we have this excellent expertise from Idaho, experience in Idaho. Our VP Exploration did his master's there. One of our directors, Don Byrack's a longtime resident of the state, member of the Idaho Mining Association. So lots of capital markets expertise, lots of Idaho expertise, and a lot of expertise with the asset Beartrack-Arnett in Idaho with this team. We are located in the western part of the United States, and I think that becomes increasingly more important as folks start to look at geopolitical risk around the world and some of the transportation challenges. I'll tell you, the Fraser Institute has ranked Idaho as one of the best places in the world to be in the mining business, ahead of all of the provinces in the country of Canada, my home country. And I'd say too that in this current crisis, as we look at the implications of the social distancing and the stay-at-home orders, in Idaho, mining and exploration have actually been carved out as essential industries in the state. So there's a recognition of mining's place in the economy and the importance that it played, the importance of the role of responsible mining in the economy. And so again, I would point to the fact that Idaho is a great place to be doing business. Here's the Beartrack-Arnett Gold Project overview shot of the project area. We assembled the land position in 2017 and through a number of transactions, including with Yamana Gold. In February last month, we put out an updated resource of 3 million ounces of gold. About 600,000 ounces of that is in heap leach, and the balance is in a mill scenario, which we think has got a lot of potential around it. The scale of the project alone is starting to attract a lot of interest from larger investors and corporates. At 20,000 tons a day milling rate, we would be a 300,000 ounce a year producer. That puts us in the top 6 of all gold producing assets currently in the United States.
Fantastic. And what we see here on the photo on the right side, is this all still, let's say, usable, or what is it around here from the former production?
Yeah, so we have an ADR facility, an operating ADR facility. We have leach ponds. We have a core logging and storage facility. We have a water treatment plant, power transmission station, power to the site, roads throughout the site. There's a lot of infrastructure here that we can redeploy. And in fact, we've already had the engineers out to have a look at the site and give us an initial assessment of what would be involved in refurbishing the ADR plant to bring it back up to commercial production. Currently, it's producing gold from residue leach from the old leach pad, but it's nothing consequential. We'll have to refurbish that plant to bring it back into commercial production. So on that point, Jochen, and I think, as you know, we've got this large mill potential, but we also have in the nearer term the prospect of restarting that leach operation at Beartrack-Arnett. It's a smaller project. It's one that a company of our size can take on readily. As I mentioned earlier, we have the team that's got a lot of familiarity with running the site, and it's a relatively modest capital cost, as we see it, to get that plant back up and running and produce gold. We have about 600,000 ounces of gold in the leach category, so that's a great starting point for us to contemplate economics for a restart of the operation, and I'll come back to that in a moment. Here we have the land position in entirety, about 50 square kilometers, 5,000 hectares. The branch of the property on the right is the Beartrack portion of the property, and you can see in yellow the footprint of the gold mineralization that we currently know about. On the left side of the property position is the Arnett area, and we can again see in gold the area of satellite mineralization there. We've got over 5 kilometers of strike now outlined on the Beartrack side of the property that's mineralized, and we've hit in every hole. We've got another 5 to 6 kilometers of favorable ground to the south of that, and we'll continue to explore in the areas noted in brown shading.
That's a rapid prospect.
Exactly. It's a blind target, Greenfield's target. We've laid out the holes for it. We're pretty excited about what that might turn up for us. And as you can see, we've got a power line running right through the site. We've got an ADR facility, which we've talked about, and roads. So lots of access, lots of infrastructure to leverage here. And importantly, we're only 1 hour's drive from a town of 3,000 people, which is the home support center for the operation past and will be in the future. Here we have a long section view through the ore body at Beartrack. You can see that we've got 4 pit constrained components to the resource across 5.6 kilometers. The deposit is open to the north, to the south, and at depth. And it's open in some of the areas in between where we just haven't had a chance yet to drill. So lots of prospectivity, lots of consistency in the ore body. And as I've mentioned now a couple of occasions, we've got 3 million ounces here already. So a great founding starting point, and we've got lots of potential to grow that.
To what depth we are talking here about?
Well,
you can maybe go one more time back, please.
Yeah. So
yeah, if I look at South Pit, for example, Joss and Wards Gulch, and there we see already that there's an extension to the depths, yeah. And how deep are you going? Is it still open pittable, or can you also go underground then?
Thank you for the question. So the copper shaded areas, the pit constrained areas you can see on this section run to, I would say, in the order of about 250, 300 meters depth below current surface. And the cutoff grades are in the order of 0.5 grams per ton for the mill material. The average grade is about 1.5 grams. So we've got lots of margin in these open pits as the resource has been constructed. Beyond that, though, and as you point out, we're open at depth, and the consulting firm RPA that did our resource update put out in February saw fit to include an initial bulk tonnage of underground material, and you can see that outlined in the gold color below the pits. There's a number of pods. The pods are roughly 5 to 30 meters in thickness. They extend over hundreds of meters in strike, and the only thing that's really constraining the potential to link those pods up is drill information. And of course, as we do more drilling at depth, we'll be able to solidify the picture of what's happening. But the answer to your question is no, we are not limited by the pit depths. In fact, we've already got underground material in the resource. It's quite an impressive mineral system. Very consistent grades, great geostatistics, and as I pointed out at the beginning, we've hit on every hole we've drilled to date.
Great, because after the open pit, if you go then underground, I mean that would give you a much longer mine life overall together, right?
Great point. Yes. Here we have a cross section through the deposit in the left, and some of the higher grades that we're seeing in the system at depth on the right hand side of this slide. Some very impressive grades in this system. I think the key point from this slide is that we've got a lot of potential to expand the deposit in the underground, to start finding higher grades. And the fact that we've got this initial bulk underground resource gives us a lot of confidence to be drilling those more expensive underground holes. And I think between what we have in the open pit and the potential at underground, we will be expanding this deposit for a long time to come. Here we have a picture of the site at Beartrack. It would be great to be able to have you out to the site at some point, Jochen, to look at this yourself. But it's really quite something.
Would love to. Yeah.
We've got a lot of infrastructure to work with. As I mentioned, we're about an hour's drive from a town of 3,000 people. We've got power lines. We've got lots of facilities to give us a head start on a potential restart of the leach operation.
Mm-hmm.
I should say something about Idaho, or a little bit more about Idaho and the community we're in. Very supportive of responsible mining in the state. It's been good to the state. The state was founded on mining. In the case of salmon, we've got a community that is supportive of what we're doing. Generally, we find that folks are looking for us to get the mine back up into operation and start putting jobs back into the local economy. And really, the two industries that we have in Lemhi County, where we're based, are ranching and mining. We've got a couple of projects in the area, and there's a lot of anticipation about what the revitalization of Beartrack will mean for the community. Interesting point of history: the land position that we're on includes one of the claims dates back to the first governor of the state of Idaho, a gentleman by the name of George Laird Shoup, here pictured, and so there's a long history and a deep roots in terms of our project with the state's growth and evolution. We get, of course, asked what's next, and we don't tend to let up the pace here. We are somewhat constrained by COVID-19 and the restrictions on travel, but we have our general manager actually based in Salmon and quite close to the project, so we have the ability to move things along to some degree. And while we are in this point of stay-at-home orders, we'll continue to do desktop work on the project. So we've got environmental work that's in process. We've got drill planning that's in process. And I think, as you're aware, we want to move next to a PEA on the leach project at Beartrack-Arnett. And so we'll get that completed this year as well. And we're in the process right now of looking at the various consultants that might help us with that assignment. So even though we're in the midst of a shutdown with the COVID-19, there's lots of work that we can still do to advance the project, and we are underway with. Longer term, we will complete the PEA. We'll get some drilling in hopefully this year, subject to budgets, and then move on in 2021 to look at the bigger project, the mill project, and potentially come to the market with a PEA on the mill project.
Fantastic. So that means you have not like a complete lost time through COVID-19. You can do the desktop work, as you said. That's very important. But on the other hand, when I saw those beautiful photos with the, let's say, infrastructure, with all the buildings you have already, percentage-wise, what do you think, or even dollar-wise, what do you think, how much money would that save you in the CapEx? And on the other hand, what is your, let's say, personal estimate? I know it's a forward-looking statement for the regulators, but what order we are talking for a 20,000 ton per day mill project? So, you know, what do you think, how much money you would need? I know it's way too early, but just do we talk about 100 million or 500 million?
Yeah, no, it's an important question to ask. And so again, we've got two paths we're moving down. One is the restart of the leach operation. And I think if we look at some of our peer companies who have taken a brownfield site in the order of 13,000 tons a day and brought that back into production, the sort of the capital numbers we're looking at are, we think, somewhere in the order of 50 to 75 million. There's lots of availability to do leased fleets for mobile equipment in the United States, very inexpensive financing. So I think it's in that order of magnitude. We would be producing something in the order of 50 to 75,000 ounces of gold a year from a heap leach operation, giving ourselves, something in the order of 6 to 10 years of mine life, with perhaps some additional exploration, taking it beyond that. So that's the kind of order of magnitude that we're looking at. Of course, we have to do the work. We have to finalize the estimates and the PEA and put it all together for the public market. But I think if we look at some of our peers, Jochen, those are the sorts of numbers we might come up with.
So it's manageable.
The mill project is something quite a bit different. It's a different kettle of fish. It will involve the construction of a large site facility. We won't be able to take advantage of the footprint of existing operational activity that we have, and which we can take advantage of for the leach operation. But we're on a completely different scale of project there. We're talking, as I mentioned earlier, in the order of 20,000 tons a day, 300,000 ounces a year. I think that's a scale of project that would be in the order of $500 million of capital. These are big mining operations that require complex planning and arrangements around everything from permitting to engineering design. Having said all of that, it's nice to have something like that in our back pocket as we think about positioning ourselves for the interest of larger institutions and corporates. That's very nice to have in our back pocket. And so that kind of that leads very well to the point at the bottom of the slide here, pursuing growth. Of course, we are working on our project internally, and we'll advance that. But we also have our eyes to industry consolidation, and I think that's really important for us, and even more important for companies like us in the current environment. There's synergy, both market and operational, that we can look to by investigating opportunities to combine with other companies, opportunities to potentially bring other assets into the portfolio, offer our shareholders diversification from risk, and also a more scale. So I think when we have these dislocations in the market, these are good times to be looking for corporate activity, and certainly we have our eye on that, and that's another activity that we're underway with.
Fantastic. Stupid question, but aren't you afraid, let's say gold moves very soon to $1,800, $2,000 and will stay up there. Aren't you afraid really with that fantastic project you have that you end up maybe too early on the M&A radar of some producers? Because what I see in the market is that we have too less exploration, too less projects to develop very fast, yeah. And your project looks to me like that it could be developed quite fast, meaning within the next 3 to 4 years into production. So aren't you a little bit afraid of that?
It's something we have to keep in mind, but Jochen, you can't look in your rear view mirror. You have to look forward, and I think that if you take the right steps now, you actually can wind up with a better scenario for investors. And by that I mean in the structure of a transaction, or in the partners you choose. So we're looking to augment what we already have, and I think the ultimate goal is to deliver something more valuable to our investors than they currently have today. We see a lot of upside in the project, is true, but we're a public company. We can't look in the rearview mirror. If someone comes along and takes us out in the current market environment, we'll do our best to make sure that we've got competing offers and multiple parties looking at the project before we land on any one. But I think either way, the future is good for our shareholders from where we stand today.
Yeah, definitely, that's what it looks like.
and really, I can sum it all up here in this slide with the fact that we are moving the project forward despite the circumstances we're in today. We've got a proven property, brownfield site. The infrastructure itself has quite a bit of value to it. I think you raised that point earlier. I can't put a number on it, but I would say to you that it gives us a head start in terms of our permitting and in terms of our construction timelines, and of course it saves us money. And then finally, I'd say we're at compelling value here, about $8 an ounce in the ground in the United States on a brownfield site. That's a lot of upside in terms of our stock. We're at about 60 cents a share. Our 52-week high is about $1 a share. and the analyst target prices are $1.90 a share on average. So lots of upside in the stock.
Fantastic, and a good ability to finance also in the future, I would say.
I think we have the kind of relationships that will be supportive in the market for continuing to build the company.
Fantastic. One last question. When I see this wonderful photo here, do you have already also some, let's say, of the old permits? Have you got something grandfathered, or does it make the permit process for you a little bit easier or even shorter because you have all that infrastructure we see here?
So it's a very good point. We are currently operating on a plan of operations on the site, which allows us to use cyanide on the site, and which provides us with a footprint to start with in terms of our construction. In other words, when we go to rebuild the site and refurbish the site, we can stay within the areas that have already been disturbed, and that in and of itself will save us a lot of time and money on permitting. We think that the permitting timelines to restart this operation will be relatively short. The community is supportive. The setting is already made. Really, it's up to us to put together the plan and then execute on that plan. So first step is the resource development. We've done that now over the last couple of years. Over the course of this year, we'll start to develop out the economics. Hopefully, we'll be back in drilling this year and continue to add to the resource. And the story will just continue to evolve from there.
Fantastic. Well, Hugh, thank you very much. That looks really great and absolutely convincing photos, I would say, because this really looks like something to be, not only refurbished, but really to screams for reopening to start gold production. And thank you very much for this update and insight. And we talk quite soon, I would say.
Thank you, Jochen.
Thank you. Yeah, ladies and gentlemen, that was Hugh Agro, the CEO of Revival Gold, and you heard it. Fantastic company update and insight here. And I think the team around Hugh Agro, has done all the necessary and right things to really get this fantastic project started. And what I like is the two optionality way, I would call it, because you can start with a heap leach production, and then you also can move on to a 20,000 ton per day mill project, which is really fantastic. And with a 300,000 ounces per year production, this project will really play a future role within the gold production in the United States. So I suggest you check out the company. Thanks for watching us, and bye-bye from Switzerland.